Good evening, everybody. Michael Silva here. We got ourselves some parabolic moves taking place, short squeezes taking place, traders reaching for higher strikes in the S&P 500, potential rotations, and so much more. And that's what we're going to talk about on today's Stock Market Brief Show, where we navigate the financial markets through the lens of technical and market analysis. Make sure to hit that thumbs up if you haven't done so already. That's how you sponsor today's episode, with a thumb. Just do it. I know you were sitting right there. You can click it. Sometimes you don't, but you're thinking about it. So just click the dang thumb. Let's get into today's episode. All right, welcome back. Welcome back. And welcome back to the people that were on my live stream. If you are watching now, if you're not watching my live streams, there's a pinned comment that goes that links you to my Twitch, where I've been doing some live streams where we really dive into the markets from an intraday perspective, and we look at a lot of different stocks. Out of the 11 sectors, pretty much everything was up on the day. Energy, real estate, materials, and so forth down the list. And tech was the only one that fell flat on its face. So we're seeing a little potential rotation. Now, all the index products were up on the day. The Dow was up almost 1%. S&P 500 was basically flat to up 0.5%, and small caps got that big bid. Traders are reaching for that higher strike there in the SPX to 50, and then also the 5100 is growing there too as well. And this is happening on the back where CTA position is at a very high percentile, almost maxed out here. So it's going to be important to see going into tomorrow's OPEX, which we have, and then we also have a very important macro data drop, which we'll cover, of what the market's perceiving as risk. But this does open the potential for a lot of selling, but you got to pay attention to where the selling could actually kick into place. And we like to look at various gamma exposure levels to know that. And right now the gamma flip line is at 49.70. So with the SPX, if we start getting below that 49.70, potentially even cracking under this 49.50 area right in here, this is where I think that we'd see much more aggressive type selling behavior. One, the dealers sell into selling, they buy into buying when we get into negative gamma territory, but that's not where we are now. Right now, we're holding above this also pretty important strike there at 5,000, floating softly there above it, below that local resistance there now at 50.50. And you can see that's at 146 million, 137 million here at 5,100. Right, we have an OPEX tomorrow, so a lot of this is going to roll off and potentially unpin the market. So we'll see how that plays. If we take a look at today's heat map, what do you notice? NVIDIA is down, Google was down, Microsoft was down, Apple was down. So all the big names, the market cap names, it looks like there was a rotation out of these large market cap names and into pretty much financials and energy, right? Those are the big ones that actually have some weighting in the S&P 500. And then also Tesla got some love finally. Go figure, right? We were talking about, hey, if they start rotating out of these bigger names, perhaps they might go show some love to Tesla. Well, Tesla over here from a year-to-date point is still down around 20%, and it's been under this year-to-date anchored VWAP. We were talking about this possibility being a little inverse head and shoulders, and today we broke the neckline on some good volume. So this opens the door to come up to at least test the year-to-date anchored VWAP. Now, I put this blue line over here because the blue line resembles just a measured move from the low to the neckline breakout and up. So a technical move would be to go, or a technically measured move from that pattern could bring us up to around that 215 area. But overall, yeah, pretty strong day in Tesla. So you can potentially watch for a back test, or, we close at the high of the day. You typically get follow through on these type of moves. So we'll see if that's the case. If we take a look at sectors and factor exposure of what took place today in the markets, this right here is the short basket, and they had the largest move. So a lot of short squeezes taking place today. And then you have energy down there. You have the Russell, which performed incredibly there too as well, which will pull up the 15-minute chart here in a moment. Overall, if you take a look here, the CPI data came out. We tested the weekly 5 EMA, which was inclining, and we basically recovered that completely, right? Now for the week-to-date perspective, we're unchanged, right? So we're unchanged, but slightly up, going into, once again, another macro report, and I'll talk about what the market's perceiving as risk. Just so you know, this currently right now is an outside trading candle. These can be considered topping or hanging man type candles. So even if we close up higher, right, and come into 50-50, or whatever the case may be, you're going to start hearing this in the message boards and Twitter or whatever, that it's a hanging man candle. But it doesn't mean anything until we actually crack the low of it and close beneath it, and then the 5 EMA would start rolling over at that point. But nonetheless, you can see bears did step up. They showed aggression, but the bulls kind of came back. So if we take a look at the the 15-minute time frame, the 5-day moving average, it's flattening out here. Price is above it, so it's bullish as it stands right now. You can look at this as a potential rising wedge structure. But just keep in mind that albeit it's a rising wedge structure, it was tightening up into a big report coming out tomorrow, which could open us up, higher, or can open us up lower. And then you could have some, obviously, some various type of tremors in the market, given that we have option expiration and AM PM settlement taking place. Then you have also a little bit of a negative divergence there too as well, but we'll see here what the report comes up out as. I do plan on going live tomorrow, maybe not at when that report drops, but I probably will be there in the morning sometime. Qs, very similar situation, right? We gap down, now we're kind of recovering, but you can look at this as a potential rising wedge structure, bear flag structure, but keep in mind the direction of the 5-day moving average, it's flattening out. So if we get below it again, then it could start rolling potentially over, and that will open up the door to come lower. And you can see from this time frame, there's a volume shelf right here, and these can act like magnets. So pulling back into 428 could be an ideal place if we start pulling back, and it would be just considered some sideways chop. But remember, once again, the report's coming out, and that can also open us up higher to retest the high, or it can break us down and get us back below that 5-day moving average. IWM has been seeing incredible amounts of volatility. And you can see here, right, we came down on the CPI report, had that day where it was down like 4+%, and in 2 trading days, we moved ourselves all the way back up into this range. It was up 2.67% today, so just an incredible move, and it has been a one-way ticket. So yeah, I'd say just be careful up in this region, right? This is, also we had a lot of short squeeze names. So as we're right now in the middle of this month, we're also at the upper monthly expected moves, slightly out of it as it stands. The dollar came off today, so that could have helped the S&P 500 move back up into this realm. We did have that shooting star candle in the S&P 500. We haven't actually tagged the high of that yet to mitigate that, but that is something to potentially watch, as the dollar has just been constantly grinding and bidding higher, except for today and the prior day where we're getting a little bit of a pullback. Same thing goes with the 10-year yield. The 10-year yield saw an explosive day, and we're back testing that breakout area. So we'll continue to watch to see if that all of a sudden gets some more strength here in the near future, right? PPI is going to move yields, move bonds, move the dollar. Those macro reports tend to do that. So if it starts cracking back down, that could potentially benefit markets as it stands right now with the correlations. But if it starts popping up higher, that could apply some pressure. So we talked about these parabolic moves, right? SMCI continues to just rip faces off if you're trying to short this thing, up 14% on the day. I mean, it's just crazy to me that you look back 1 month, right? Or even the start of the year, right? We're like at 300, right? 300, we're like at the low right here, we're at 300. And like a month later, literally a month later, it went from 300 and now we're trading at 1,000. So just be careful with these type of moves. This is absolutely credible. If you watch the other video that I made, I talked about parabolic moves and some other things. Now, I don't think this is going to crack down and break to zero, but it is of concern when we're talking about like well-functioning markets. Like this is pretty wild swings, as far as a big ETF goes. Now, someone had mentioned in my live stream is IWM moving this much because of SMCI? SMCI's weighting in the IWM is about 1.6%. So no, I don't think it has a big control over the IWM, but I will say that if this goes down, or whatever, perhaps that might bring some other stocks with it, and that is what would control it. But yeah, the weighting, this is the number one weighting in the Russell 2000 at 1.3 or 1.6%. I don't have that in front of me right now, but that's, oh my gosh, I do have it in front of me. I can bring it in. Check it out. Excuse me, I'm doing this live. Okay, so SMCI right there, boom. You can see 1.62%. That's the number one holding as it stands right there in the Russell 2000 by iShares. Let's continue on. So tomorrow we have PPI month over month, we have building permits, and then we also have Michigan consumer sentiment. So it's important to know this stuff, and I could go over narratives of what I think may happen, what I expect to happen, whatever. Consensus is, you can just look right at consensus on both Michigan consumer sentiment and PPI. What matters to me is what the market perceives as risk going forward. So going into tomorrow, right, for the week, we had a $64 expected move in the SPY. Right now for the SPX, we're looking at about a $30 expected move. So if I look at that's the SPX. If I look at the SPY now, The SPY, this is the white lines, right? White lines, we're basically right in the middle of the weekly expected move. And we're right now, pretty much unchanged on the week. So we're looking at about a $3.25 expected move, which could bring us up to 505.26 or potentially down to 498.676. Now we've been breaking these daily expected moves, and a lot of this has been taking place on the back of zero-date option flow. Today we closed just slightly above it. But we flagged out, and we saw the flow during the live stream really start to target some key levels. More specifically, it was, if I pull up this chart, we were targeting 425 and 430. And that is where we pulled right into and chopped around for the majority of the day. That's where everyone was gathering as far as the trading perspective goes. All right. So we talked about the various names here on as far as like where they stand on the 5-day moving average. We touched up on the dollar, we touched on SMCI, and then what the market's going to be perceiving as risk. Once again, we're above a 5-day moving average. It's rather neutral. The longer we stay there, that's more it's going to curl back up. We're in positive gamma territory. So these are checks for the bulls as it stands. Now, things can obviously change quickly, so we got to be prepared. But now, since we covered that stuff, I do want to hop into some names that have been showing strong earnings today. The first one is Pega. PEGA, Pegasystems. So this one's up 35% on the day. You can see that we were in kind of a sideways consolidation. Price action was getting a little tight here, and a huge move. And the reason why I'm showing you these power earning gaps is because they can set up, right? Strong power earning gaps typically have continuation to the upside. So what I like to wait for is a couple maybe inside days, or even if it goes higher, for consolidation. So these are the names that are going to be kind of on my radar to see if they flag out or set up. Because I like to see, once again, say if we start to flag out right now, right, and volume starts to dry up and contract, maybe it goes for 6 or 7 days, whatever the case is, then it could set up a low risk to reward to get some potential follow through on the names that are showing some strength. So Pega is one of them. We have App, that's another. This one was showing higher lows, right? Then it flagged out a little bit, and then we had earnings. So now that earnings has passed and it was a bullish earnings gap, I like to see if we can consolidate and set up for a trade for continuation. If we go to Crocs, it was another one. We had these higher lows. It broke out. It back tested. Now we saw some strength here too in Crocs. So what I would like to see once again is some sort of consolidation, contraction, and then play for the, continued momentum to the upside. So those are some of those names. You can always look every day or whichever during earnings season, and then you can look through the main ones that are reporting. Typically the ones with higher volume, smaller bid-ask spreads, and if they're in nice context, and if they close at the highs of the day and you see a strong move, I put those on the radar for potential continuation. That's all I got for you on today's episode, everybody. Hope it helps out, and come check out my Twitch stream. I'll be live tomorrow. See you later.